We're looking here at the chart of gold since 1920. That's 105 years. In that time, gold has gone up 160 times, which is about 15,000%. But it's a fallacy to believe that it has gone up by 15,000%, because it hasn't. It has actually just been standing still in purchasing power. An ounce of gold today buys a good man's suit, which it did 2,000 years ago. So gold is not going up at all. This graph is a fallacy. It's false. All it's telling you is the price of gold in US dollars. So we should really turn the chart upside down, because that is what is happening to the dollar. It's not gold going up. Gold is just going sideways. It's the dollar, like all the currencies, just falling without stop due to the mismanagement of the economy and the currencies by the US government and by all governments. Now, that hasn't changed in the last 5,000 years. Every single currency has gone to zero throughout history. Now, at this point in 2025, I think we are at the end of another monetary era. And we see that in the escalation of debt, of deficits, in the fall of the dollar, and also total chaos in the world, politically and geopolitically. Wars, useless leaders in every country, especially in the Western countries, of course. Let's look at this chart again. We had a gold standard up to 1933, and then, of course, gold was revalued and the dollar was devalued. The gold price went from just under $21 to $35 an ounce. But then the gold standard continued in some form until 1971. This was the famous time at 15th of August, 1971, when Nixon said that we are going to not let the foreigners speculate against our currency. It's not the foreigners speculating, they're the foreigners seeing that the dollar was losing value quickly, and they didn't want dollars. De Gaulle wanted gold. He asked for gold instead of dollars when US owed them money. So consequently, in 71, dollar was no longer backed by gold. So the $35 backing didn't exist anymore, and gold started going up from 1971. I remember it well, actually. I was working in a bank in Switzerland, and we saw how the gold price started rising rapidly from $35 to $850 in 1980. Again, remember, it's not gold going up. It's the government's just is destroying the value of your money by printing endless amounts of dollars, yen, euros, etc. Now, we had a break from 1980 to just around 2000, when actually gold corrected down and went sideways. It always does. It never moves in a straight line. It goes up rapidly, and then it stops for a while, and then it continues again. As you can see again from the chart here, so gold corrected from 1980 to 2000, and it was around 250 in 2000. That was a time when we as a company decided that we need to protect our assets and that of our investors. So we suggested to our investors they should buy gold up to 50% of their asset at around $300. That was in 2002. And obviously keep it safely outside the banking system, protect against the fragile banking system and financial system. And of course, we've held on to that gold since then. During the end of a monetary era that we're seeing now, of course, everything goes wrong. It's not just the money printing, obviously inflation. Inflation is not actually prices going up. Inflation means the value of your money going down. But governments will never admit that, of course. It's that they just blame inflation. And now we have reached a point with gold at $3,300, $3,400, when I think we're entering an exponential phase of gold going up. Why? Well, there are many reasons. First of all, since the US and therefore the EU, that always follows the US, whatever they say, they don't dare to do anything different. Since the US decided to freeze or confiscate the Russian dollar assets around the world, and Europe followed, central banks decided we are no longer going to hold our assets in US dollars because it can be confiscated by the US government. So now we're seeing a gradual shift by central banks of their reserves away from dollars into gold. That's why we're seeing continuous buying of gold by central banks. If we go back to the late 90s, every central bank sold their gold. They sold it at the bottom. The UK, Switzerland even, Canada has no gold, Norway has no gold left. They all sold it at the lowest point in the cycle. Now we're seeing mainly BRICS banks, Eastern and Southern central banks buying gold, not the Western banks, but they see what's coming. So we are going to see a major shift by central banks and therefore also by investors, institutional investors, family offices, from paper assets into real assets. And gold is going to be obviously the number one asset from the purpose of wealth preservation. Remember, gold, as I said before, is the only money that has ever lasted in history. Every other currency has gone to zero. As Voltaire said in 1728, I think it was, paper money eventually returns to its intrinsic value, zero. So the dollar is down, and all of the Western currencies and most other currencies too, 99% since 1971, measured in gold terms. So we only have 1% to go for the currency to go to zero. But of course, 1% from today means it's going to go down 100% from today, because if it's going to go to zero from now, it needs to go down another 100%. And that's, in my view, what we're going to see. We're seeing bigger deficits than ever in the world. Debt's going up faster than ever. US being more mismanagement than it's ever been. And that's the typical signs of the end of an era. So these are facts. But what are the consequences? The consequences are that you are going to see the biggest destruction of wealth in history, because we have now paper assets that are all in the bubble: stocks, bonds, property, etc. And that means that in relation to gold, all of these assets will go down 72 to 99%. The bond market will go to zero, in my view. If they go to zero, interest rates will go to infinity, and we will have very high inflation. But at least interest rates will go back into their teens, like I remember they were in the 1970s and early 80s. And we'll have a major fall of especially the Western economies around the world. Of course, the East and the BRICS countries will suffer also, but not to the same extent, because they're more commodity-based. So for people now who want to preserve their assets, remember there is only 0.5% of world financial assets in gold today. 0.5%. Central banks hold about 36,000 tons of gold. You know, that 36,000 tons is about $3.8 trillion. The value of Microsoft, one US corporation, okay, the biggest one, is $3.8 trillion. So we're looking here at one company in the US worth as much, is valued at $3.8 trillion, which is the same as all the gold held by all the central banks in the world, which are supposed to back the currency of these countries. You could see a massive mismatch between real assets, gold, and bubble asset stocks. So in my view, what was going to happen to the gold market is that because of the major investment that are going to gold at the same time out of paper assets, gold is going to be revalued by multiples. But it's not the value of the gold measured in paper money you should look at. It's actually that how much gold you hold. An ounce, a kilo, a ton, whatever, depending on your level of investment. At whatever level you hold it, that is going to preserve your wealth and save you from the destruction of the paper assets that we're going to see. Remember, gold is nature's money and the only currency that has survived throughout history without fail.